the market is going to crash in 2024. Hey, you're going to forgive me for that clickbait line. I want to talk to you about why the real estate market is not going to crash. Welcome back. I'm Dale Pena, and I want to share with you 5 reasons why the market is not going to crash in the next couple years. I want to start with number 1. The interest rates will come down. You saw the lowest interest rates you have ever seen in history in 2020, 2021, but they have been going up in the last 2 years, 2022, 2023, they went up, but they are expected to go down in 2024 and 2025, which a lot of savvy home buyers know that the average of a person staying in a house is about 11 years. And these are the buyers who are buying their homes with adjustable rates, which, they get an 7-year ARM with a low interest rate now, and then they refinance when the interest rates come down, or they pay some extra in closing costs to buy down the rate, and they have an interest rate of, let's say, 5%, which is, based on what we've seen with inflation, it's almost free money. It's just the money, you have a loan, and the inflation is super high, you have a 5% interest rate, you're probably breaking even with your money. A lot of these people, they don't want to pay down their mortgage super fast because they know that that's not their forever home. That's number 1. And number 2, it's the inventory will remain super tight. COVID has increased the intrinsic value of real estate. People were spending a lot of times in their homes in 2020. The appreciation for a home's utility increased. That is why the homes held their value while the real estate market dropped 32%. Not the real estate market, I'm sorry. The homes held their value while the stock market dropped about 32% in March. And with lower inventory for longer, the demand will continue to go up, pressuring the home prices to go up. That's number 2, why there won't be a crash in the next couple of years. Number 3 is the buyers are richer post-pandemic. The home buyers are richer post-pandemic. If you remember 2020, before the COVID, a lot of people didn't have as much money in the stock market. If people have money invested, it was a drop in March of 32%, but that bounced back immediately towards the end of the 2020. 2021, it was definitely a bull market, and some people lost their gains in 2022 because the market was a little bit negative, but they tend to gain it back in 2023 if they invested for a long period of time. That is why people are richer. These home buyers are richer now than they were in prior COVID-19. Another reason is a lot of these people, they never lost their job. They remain making money, and they work from home, which they tend to save a little bit more money that they weren't going out to eat, or they weren't spending money on transportation. So that money goes into the stock market, whatever. Also, some of the people got some of the government money that printed and sent a bunch of money. And home buyers that are, like I said earlier, savvy people will probably save that money and put it into an account that has double or triple in the last 3 years. Number 4 is a multi-generational wealth transfer. The boomer generation is one of the wealthiest generation in history. They have been able to enjoy and invest on the longest bull market in history. That's insane, because they have not seen, if you think about it, you could buy a house in the 90s for $30,000, and you would have a 4-bedroom, single-family home, backyard, and you got all the things that you wanted that now you cannot find or afford. They definitely have enjoyed that. There's about $30 trillion in wealth that will get transferred from boomers to their kids when they die. And these are the people, a lot of that money is going to be going into the real estate market. And that's going to saturate the market, and it's going to drive prices up. And that's another reason why we will not be seeing a real estate market crash. Number 5 and last, there's so many reasons, but I just want to focus in a few because we tend to learn, and when it's small percentage, we tend to learn and keep that information when there isn't that many leads to remember. Okay, number 5 is home ownership. Cushion is massive. If you can look this up, the equity, the equity that people have in their houses, it's about 50%. I was looking at the numbers. There is about $21 trillion in real estate, and there is about $11 trillion are mortgage. So almost about 50%, it's pure equity. There's people that are sitting, they're having a house that the property is worth $500,000, and they only owe in the mortgage $250,000. So if things were to get hard, these people are not going to sit outside and say, I need to sell my house now, immediately fire sell their houses, or let the banks take the house or short sell or foreclose, because they have so much money in equity. Things get hard, they can easily turn around and sell the property for $500,000, the market value, pay off the mortgage they owe, and still keep $250,000 in their pocket. That's what is happening, and that is why this real estate market is not going to crash anytime soon, because there is so much equity in the market where people, let's say the houses start going down, hypothetically, all of these people are going to they could easily sell their houses. The properties are not going to drop 50%. We've never seen a property dropping 50% of value. It's going to drop, let's say it drops 25%, $500,000 property. Now it's worth $375,000. The people owe $250,000, they still have $125,000 equity. So that's why it's really hard for people to think there will be a market crash. So, hey, these are the 5 quick tips on at least 5 quick reasons why the market is not going to crash in the next couple of years. One of them is interest rate will drop. That will create a demand. There's a lot of home buyers that are sitting on the fence waiting for the interest rates to drop. And when the interest rates drop, that will create higher demand, more offers. More offers means higher prices. Number 2 is inventory will remain tight, because a lot of these people that already have a house, they don't want to get rid of it because they have a 3.5% interest rate, and now they don't want to let that go. They might buy another property and they might rent that home they have. So that is going to keep the interest rate, the inventory tight. Number 3, home buyers are richer than they were post-pandemic. Like I said earlier, a lot of these people, they double, triple their money in the stock market, and they're sitting on a lot of gains, and that has made them richer. Okay. Number 4 is multi-generational wealth transfer. There's going to be a lot of boomers who will be giving a lot of their wealth to their kids. There is I mentioned earlier how much there's about $30 trillion in wealth that it will get transferred to all of these kids that will take that money probably, and a lot of that money will go to the real estate market world. Number 5, it's 5 and last is home ownership equity cushion is massive. What I was saying, there's a lot of money in the stock in the market, in the real estate market, that is not mortgage. Like the examples I mentioned earlier, somebody owns a property, the property is worth $500,000 and the mortgage is $250,000. Most likely the bank cannot foreclose on a property with that much equity. The problem when properties get foreclosed is the property is worth $500,000 and the loan is $600,000. That's when it's like, okay, the bank has to take over the house because the owner cannot do anything. But if you have that massive home equity, that's not going to be happening. So if you're thinking about waiting for the market to crash, you're going to be sitting on the fence a long time. Best thing to do is act now, buy real estate, refinance later, or figure out a way to find a lower rate, buy value rate, adjustable rate, because the market might not crash. Okay? And thank you for watching. And if you enjoyed this video, please give it a thumbs up, share it with your friends, somebody who is skeptical in the market and thinks that the market is going to crash. These are really good reasons. I'm sure they will try to debottle this and say that's not true, but these are facts of what's happening in the market. So until next time, and be great.